Thank you for joining us at XM.com for today's market comment by Rafi Boyadjian. I'm Maria Bashirdes. Markets were hit by some unforeseen turbulence on Wednesday as oil prices plummeted on OPEC's announcement that Sunday's meeting has been postponed to November 30th. This month's output decision was already building up to be a major one, as the OPEC and non-OPEC alliance was expected to extend the latest production cuts into 2024. But the delay has spurred speculation that member countries are struggling to reach an agreement, casting doubt about OPEC Plus's commitment to maintaining tight supply. Oil futures tumbled by more than 5% at one point before recouping most of the losses. Reports later in the day that the disagreement mainly involved 3 African countries who are seeking to raise their 2024 production quotas eased concerns of deeper differences within the cartel. Even if it's simply a matter of more time needed to hash out a deal, there seems to be a reluctance within OPEC Plus for additional cuts, and that's why oil prices have come back under pressure again today. The volatility hasn't been confined to oil prices, however, as OPEC Plus's decision has implications beyond the oil market, as it could either quicken or stall the progress for central banks on getting inflation all the way down to 2%. With many traders already anticipating that rate cuts are just months away, yesterday's drop in oil prices fueled those bets. This boosted the US dollar, as high energy prices are seen as being less of a factor in keeping inflation elevated in the United States than in other places such as Europe and Japan. Nevertheless, the greenback was softer today, as the euro and pound were lifted by better than expected flash PMI numbers for November. Although it's too soon to rule out a recession, there are tentative signs that the Eurozone downturn is bottoming out, while the UK economy even managed to grow slightly in the first half of November. In equities, European and Asian shares mostly edged higher amid light volumes, as both US and Japanese markets are closed today. Wall Street managed to close in positive territory on Wednesday before the Thanksgiving break, as Treasury yields remained pinned down. Even with NVIDIA's 2.5% drop, the S&P 500 and NASDAQ Composite held within their current upward trajectory on hopes that the Fed is done hiking rates and that the next move will be down. Thanks for watching today's market comment here at XM.com.